Hi there, Tanisha Coffey here with Rock Solid Financial, and welcome to Business Succession Planning with Life Insurance Products. So, I want to tell you a little bit about myself and my company. I am Tanisha Coffey. I am the owner and principal at Rock Solid Financial, and we are a consultancy firm that specializes in providing small business owners with life insurance based strategies for protecting and cash flowing their business, tax free retirement planning, and financial planning. So, if you need assistance with any of those types of things, please do reach out. Today, we're specifically talking about business succession planning. And in a nutshell, a business succession plan is a blueprint and it helps you to transfer ownership and management of your business in the event of your death, retirement, or in the case of disability, whether that's short term or long term. Business succession planning also ensures that businesses can continue to run smoothly even after one of the company's most important employees separate, the key employees of your company. The thing is that most companies are not prepared for any sort of succession planning in any of those scenarios. In fact, 56% of companies have no plan at all. And those that do often have little more than a checklist for handling things when someone is on vacation. So, one of the exceptions to that may be retirement. People do tend to think a little bit about retirement, but even at that, typically the plan is I know I'm going to retire in 6 months. And so the company will begin to make plans for maybe transitioning the roles and the work that the person is doing, but they don't necessarily always think about the other factors that are involved that would be the financially related impact of the person retiring from the business, particularly if it is a key employee who is retiring, of course one of the owners. So, what about some of the other scenarios that can happen too, besides retirement? What about if you have a partner, if you have business partners in your business and things are going fine when you start out, but then something happens and you end up splitting? What are you going to do then? If you don't have a business succession plan in place, you're kind of left in limbo. And then what about if you happen to, end up in an accident? Something happens to you, say like an hour from now. Or what if you got really sick and you were hospitalized for an extended period of time? How would that impact your business's operations or its revenue, its employees, its customers? How would that impact your personal income? Because all of those scenarios could really have a trickle down effect, not only on the business, but your personal life. So, how would that impact you and your personal income? Have you ever really thought about that? So, I want to share some facts with you to help you to really understand how important business succession planning is and to take the time to actually do it. So 78% of small businesses are family owned. That means that a majority of time, the entire family life, their well being, the income, the things that they're able to do rest with the income that comes in from that business. And when you do the numbers on that, 45% of the business owner's net worth is in the business itself. So it's not only the income that the business owner actually brings home, but then part of their wealth is wrapped up in the actual business. So if you don't have a succession plan in place, then you're putting 45% of that person's net worth at risk of being in limbo because you didn't take the time to plan. Now, typically, when you have family businesses, they will do a little bit of planning, but that planning typically ends with doing a last will and testament. And the thing about a last will and testament is that really only applies if someone passes away. But what about the other scenarios where someone retires or someone becomes disabled or someone just decides that they don't want to be part of the company anymore? The will not handle those types of things. Also, typically, a will does not handle the financial aspects that one may need to undertake in order to take over a business. That's where, um, you know, creating a solid plan and thinking through not just the what has to happen and who has to do, but how it will be done, including how it will be financed. Some more facts for you. Now, a majority of small firms are likely to suffer financially if the owner were to die or have a long term disability, but only 20% have business life insurance and 18% have business disability insurance. So go back to thinking about the fact that a number of businesses are family owned. So, again, that means that a very small percentage of people are actually protecting themselves as business owners, which means that, again, not only is the business at risk because they're not putting plans in place, but then even personally, they're not putting things in place to protect themselves. 95% of small business owners acknowledge the importance of an exit and succession plan, but only 1 in 8 has written plan for leadership continuity. Where do you fall in that? Are you the 1 out of the 8, or are you the 7 out of the 8 who have not come up with a plan yet? I'm sharing these with you because I need you to understand how important it is to have a business succession plan, particularly if you are building a business that goes beyond you. And really, even if you are, say, a one person business and say you're married, if something happens to you, your spouse or significant other, or if you don't have a spouse or significant other and you're planning, you wanting it to go to your children, whoever's left behind, being left with it, they still are going to have to handle the matters of your business. And so it's really important to put a plan in place so that that can be carried out with as little friction as possible. Now, 70% of family businesses would like to pass on their business to the next generation, but only 30% are successful. Again, part of that goes back to the fact that a lot of family business owners will just put it in the will that they want the business to be passed on, but they don't take the other steps that are necessary to make sure that that can be executed. You can leave somebody a business, but if they can't afford to run it, if they can't afford to, um, to pay to be a part of that business, if that's what needs to happen, if there's partners involved, then that would not happen. So your wishes would not be heeded. All right. So I say all of this to say is that you spend all this time, years, sweat equity in trying to build your business up and to make it successful. So you really should take the time to to actually plan the succession of the business so that if you can either pass it on to someone else, or if you don't want the business to continue after you have decided that you don't want to run the business anymore, you want to retire, or if something happens to you, if you don't want the business to continue on, go ahead and put those plans in place so that you don't have a bunch of undone things left in your wake. Now, succession plans can vary greatly. It really depends on what you want to happen. It depends on your business. There's a lot of factors that go into it. However, there is one tool that's commonly used to fund the plans so that they can be carried out, and that is life insurance. So there's lots of different ways that life insurance can be used as part of succession planning. If it's a family business, then some of the ways that it's commonly used is for estate equalization, estate liquidity, or for creating a family bank. Now, if it's not a family business, or even if it is, even in family businesses, there are two other ways that life insurance is commonly used, and that is through key person insurance as well as part of a buy sell agreement. So let's jump a little bit into the key person and the buy sell agreement because that's more general of how anyone, any business owner might be able to use the life insurance. When it comes to the other three, that gets into much more specifics of family dynamics and what they desire. So it gets a little bit more complex. So we're not going to touch on those today. We're going to really stick with the last two. All right. So when it comes to business continuation for your succession. So you want your business to continue going on. Say somebody has left the business, they separated the business from the business because they want to go do something else, and they were a key employee of your business. Then you might want to have some key person insurance. Say that you are, of course, as the owner, a key person to your business. You might have key person insurance for yourself. If you have other executives whose role is critical to the business, and without them, the business would either stall or be significantly handicapped, then they are key people in your business, and you might want to consider key person insurance. So, the key person insurance policy basically protects the business owner in case a key person of the business within the business becomes totally disabled due to illness or injury, or in some cases, if that person leaves the business, as I just described. Now, the benefits from this type of policy allow the business owner to offset costs such as temporary staffing, find a replacement, recruiting, loss of revenue during training, or just in general because the person is gone. So that's the way that key person insurance can be used to help the business to continue if a key person were to not be able to do their job or has chosen not to do their job and the business has to adjust. Then you also have a buy-sell agreement. So a buy-sell agreement is a legal contract, and it's focused on, of course, buying and selling of the business or a portion of the business. And this typically happens, maybe if somebody is an owner is retiring, but then they want to sell the business to a third party, or perhaps one of the owners is retiring, but there's partners who are not retiring. Those are other scenarios that a buy-sell agreement might be a good idea to have in place. Basically, the way life insurance plays into this is that the life insurance policy is actually what typically can help to fund the buy sell agreement, the actual monies that are exchanged in order to fulfill the deal. And it allows businesses to continue without interruption, but it also, because you're using the life insurance policy to fund the deal, it relieves the business of being obligated to actually come up with the monies out of their revenue or assets in order to fund the deal. Some other things that you might want to consider about buy sell agreements is that typically each owner, so say that you have three partners in your business. Well, each owner would own a policy on each of the other owners. So if you have owners A, B, and C, owner A would be paying for two policies on owner B and C, and so forth. And it would continue. So each person would do that. And then what happens is if one or the other owner dies, then the death benefit allows the surviving owners to then buy the other's owners shares of the company. So say that in the scenario I just described, you have, the three owners, A, B, and C. Well, if owner A passes away and she's married, then her spouse would likely have control over her portion of the business. Well, owners B and C could then use the life insurance policies that they had on owner A, and the benefit from those would be given to the spouse of owner A in order to buy him out of the business. So basically pay for her share of the business. So that's how that would kind of work. And it's a typically a great option. It's very commonly used, and it's used because all the owners have policies on each other, and that creates a level playing field for the partnership. All right, so that's all we're going to talk about for today. It gets a little bit complex, but if you are interested in using life insurance to help with your business succession plan, feel free to reach out for a consultation. I'd be happy to speak with you and help you with that. Thanks so much for joining me today. I'm Tanisha Coffey with Rock Solid Financial. Bye.